Mahima's still with us because she has the big brokerage call of the day. Citi remains positive on OMCs. Mahima, what are they saying?
Right, so what they're saying is that they've got multitude of reasons as to why they believe a price cut may not be an imminent eventuality in terms of why they remain buyers on these OMCs at the current levels. What they believe is that a price cut may not be a near-term possibility, and preliminary Q1 FY26, what they believe is that estimates suggest strong QOQ growth for both HPCL as well as BPCL, and FY26 earnings outlook for OMCs look robust, and this could be led by first higher marketing share margins and second better GRMs and lower LPG losses. They're also saying that OMCs have in terms of combined LPG losses could decline by around 20% in FY26 as compared to how FY25 fared, and as per them a lack of inflationary pressure should preclude the need for an immediate fuel price cut in their view. So this is the reason as to what makes them bullish on OMCs.
Okay, so this is the big one. Mahima, while you are with us, it seems to be the Mahima morning. Very quickly, MGL, because after Citi yesterday, Morgan Stanley has a note here. So quick word on that.
Right. So what they've done is they've maintained overweight with a target price of 1797, which is almost a 35% upside from yesterday's closing for MGL. What they're saying is that MGL is accelerating infrastructure to and pushing to continue the City Gas infra. In terms of the next 5 years, they've got big plans. They're actively seeking organic opportunities as well, and India should lead the adoption curve to absorb rising US natural gas exports as well. The company plans to add around 80 new CNG stations versus that of only 66 stations in FY25, and currently around 98,000 vehicles per annum are adopting natural gas over oil. This is the current FI scenario. And lastly, they also believe that there's growing opportunities in the transport and industrial sector, and India should lead the kind of adoption curve that is happening. So this is why they're placing MGL as an overweight and have maintained the target price that they've given, which is almost a 35% upside from its yesterday's closing.
Okay, thanks a lot for that, Mahima. So watch out for some of those stocks. Watch out for the stocks which have come out with news flow, right? So we spoke about Protea and EGOF, a small 100 crore order, but after the cancellations that have come in, is that positive? Yeah, Capri Global is the other one, but let's start with Protea and EGOF, 4.5% lower, higher. Capri Global is lower because it rallied 19%, and this QIP is happening at a floor price which is about 15% lower than the closing price. So no surprise that there's a bit of a downtick on that stock. Premier Energies is the other one on which there was a block, and I wonder what Premier is doing in the session this morning. So that's the other one that we should try and pull up. Well, about 3% higher. Not bad for some of these names. Okay, Sunny Agarwal, to you. Oil marketing companies, are you a buyer here? Why or why not?
Yeah, definitely. I think as we have seen that margins are likely to improve during FY26. So September and December quarter were slightly weaker. So FY25 was a year where there was a burden of LPG subsidies also. So FY26 is a year where you will see a kind of expansion in GRM, and at the same time, we are hopeful that the burden of LPG subsidies will reduce substantially. Offer a very attractive risk to reward ratio at a current juncture. I think most of the companies are trading close to 7 to 8 times price to earning multiple, very robust dividend paying machines, all these companies. So we believe again within this pack we would like to be more constructive on HPCL, where we believe the fair value of the business is close to 480 rupees. So keeping that price target in mind, we would be a buyer in HPCL.
That's with regards to OMCs. Very quickly, we were just discussing what's happening with the Coffee Day Enterprise. No reason, but the stock is up almost 15 to 20% in the last 2 to 3 trading sessions. Kunal, what are charts indicating on this one?
This is one stock which we don't have a track on it, and we don't track the stock very aggressively. So overall, looking at the charts, I don't see any fresh momentum building up into the stock. So I would say it's an avoid at the current levels.